Welcome back to another special edition of the Changing Hearts and Minds series. I'm Ellza Malok with BMG. I have my colleague here, Yangbo from INNOVO. Hi, Yangbo. How are you?
Doing very well here.
Great to hear. So today we're going to really focus on the commercial public asset management conversation, really around maximizing value per land unit and really the outcomes that go into it. So let's talk a little bit about what commercial public asset management means and some of the immediate drawbacks or problems that the organizations or institutions are facing.
Yeah, indeed. So break into two parts. So one is direct and one is indirect. So let's start with the indirect angle here. And this applies to any type of asset base. It doesn't all have to be public sector, but just any type of asset base. On a fundamental level, the financial productivity of your land use, as in what's the value per unit, whether per acre or hectare, depending on your locality, that is fundamentally what's going to determine what is the level of investment into the public realm, into public amenities, into other public assets that you as a community are going to be able to afford, since this is really a measure of what is your capacity to generate what's called own source revenue, which is the most sustainable source because that's not relying on any transfers from other entities. It's what can you generate from within. And much more directly, as far as the public sector is concerned, and this is especially salient in the United States, where many municipal governments have not marked their properties to market for decades. But if they were, in many of these cases, you can even see a tenfold, if not 20 or 30-fold plus uplift in the actual value of those
Mhm.
assets, which in many cases is more than enough to cover whatever liabilities that those municipalities would be facing down the line. So in this case, by developing those assets to highest best use, it's not even just improving your public asset, your public sector balance sheet, as in your assets and liabilities. You do in a way that creates a virtuous cycle so that by positioning those assets, repositioning them to higher and better uses. One is by actually increasing like housing supply, by increasing the availability of commercial space, say for new businesses and all others, mixed use, you name it. It adds to the value of your public asset base. And then with that uplift, thanks to that uplift, you are then able to then reinvest that or recycle that uplift in public wealth back in to the public realm, into public improvements, into additional public assets that you can even say acquire, say expand your public asset footprint because you want to be able to offer more amenities, a wider range of housing types, wider range of spaces for new commerce and anything.
Yeah. So I think that the maximizing the land value and really identifying the smart use of those assets is for new development or redevelopment in that particular space is one element. Now, because there's also an emotional component, right? When you have areas that are underdeveloped or in dire need of change, even though the
Underutilized.
overall underutilized to it, there is this emotional or lack of emotional connectivity to that particular community to say we have all these high potential spaces that are underutilized and need some support. Not only does that create an emotional response to it, but it also creates a bigger challenge. And we know that there's a housing challenge in the US, especially in very particular cities, there's a drastic one. The more we increase housing stock, the more affordable homes become just inherently, because it is very much a supply versus demand problem right now. So part of that is also going to be those indirect impacts of being able to use them in very intelligent ways and creating them in ways that and designing them in ways that the community will actually utilize at a higher rate than what standardizes it. A good example is libraries. You know, there was a period of time where libraries were actually shutting down because there was a perception that they weren't needed because the utility was so low. Well, when libraries started to, one, when a younger generation that had less resources than the previous one started to use libraries, the utility rate drastically increased, and the perception of libraries also increased as a higher value opportunity for both the municipalities that had to fund them and maintain them, as well as the community population that was using them. So I think there's a multi-prong approach when it comes
There,
to commercial public asset management
yeah,
specifically, and in that, because the more you can see kind of a liveliness to a community, the more attraction it's going to pull. Obviously, there's a property tax revenue opportunity there, um, and just increasing things for a higher appreciation rate, and then increasing the neighboring properties around it that may not be commercial, that may not be public assets, but maybe private assets as well.
right. And the opportunity there is, and this is something that nonprofit entities here in the States have started picking up and other groups, is by integrating, let's say if you have a library, for instance, how might you then integrate a commercial use on that same piece of property, for example, or a school for that matter, or name any type of a public amenity, that how might you then integrate commercial assets? So, for example, could you not have a library or a school on the ground or the lower floors of a much higher intensely used residential or commercial building, for instance?
Hmm.
And chances are these would be very location efficient. It's already an activity center, and then thus meaning that it would be easy for many residents to access without the need of a private automobile. So walking, cycling, transit, you name it.
Yeah, and I think that's a really good point of, like, making first, second, and third place much more connected to each other when we talk about how we can use public assets as an opportunity for newer growth channels for it, and transparently just increasing economic opportunity. If you have library, school in the same, potentially um type of other activity hub, whether that be a residential space or even a commercial space to be utilized. Now you've got, work, life, play in very similar or in close vicinities. And we know that historically, not only anthropologically was that more true, it was much easier for you to have, the village mentality for generations to grow into, and something that we connect to. But it is one that, traditional economic models show it's better to have things, at a smaller scale and more close to each other than at these massive scales and far away, because it makes things much more disconnected from it. And it also actually increases the emigration out of that region to say, I want to be, closer to family or closer to X type of need. It's one of the reasons why suburbs were born, transparently, is that concept of not being so close and congested, but being close enough that is within a distance that makes sense.
Yes, indeed.
Yeah. Um, so I think overall, if as communities are starting to reallocate or look at their existing assets, part of that is really evaluating it. I know you and I have a strategy lab and a workshop that we can we can kind of work through and talk through with those municipalities. I will link that that booking session for to talk to us at the bottom for those municipalities that are kind of saying, how do we look through it? I think the workshop makes the most sense for this because their balance sheet will be able to tell us what's viable and what's not on a pretty quick basis before kicking off some type of initiative to make those changes.
Yes, and much of this is really, and it's honestly the most effective means of doing this because all of these tactics, all of these strategies have already been proven in other regions. You can name examples like Singapore,
Mhm.
Hamburg, Copenhagen, quite a number of different places around the world. And really, it's so deceptively simple in many ways that really you're just changing how you do public sector accounting, which in the US has been very slow to shift relative to other places from cash accounting to accrual accounting, which actually then incorporates, well, what are your future liabilities? What are your future assets? As opposed to just what do you have at this snapshot at this exact point in
This
time?
point in
So
time. Yeah. Um, okay. Well, this has been such a really good conversation, and I will link the document below for a workshop discussion with Yangbo and myself. But thank you, Yangbo. This was very helpful.
you are very welcome, Elsa.
Take care.